From the earliest 20th century until the late 1920s, the United States experienced remarkable economic prosperity. From 1922 to 1929, the country's gross national product, which represents the value of goods produced in a fiscal year, consistently grew at an annual rate of 5%. The gross domestic product exceeded $200 billion, and certain individuals' wages soared by 15%. Moreover, throughout this period, the unemployment rate remained below 5%. However, everything changed on October 29, 1929, famously known as Black Tuesday, when the stock market crash on Wall Street plunged the United States into the Great Depression. This economic crisis persisted from 1929 to 1941, becoming the longest downturn in the nation's history. And here's what some experts have to say about this.
It is impossible to underestimate the shock, a sense of stunned disbelief.
First-time investors borrowed huge amounts of money to speculate on the market.
The market broke very sharply, and a lot of people were wiped out with it.
To fully grasp Warren's warning and discover the vital measures he recommends for securing your financial future, it is best to watch this video until the very end. So let's get into our main discussion.
I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy. The stocks are going to go down. You could probably look it up as to what percent of the days, since I was born, they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do. But
in those periods, they witnessed a remarkable economic recovery, but the collective psyche of the people remained deeply scarred. The stories of Aaron's generation echoed throughout the years, turning the year 1929 into a powerful symbol in people's minds. It carried the weight and recognition similar to the mention of 1776 or 1492. Everyone understood the significance of 1929. It was under these circumstances that Warren Buffett was born. According to Warren, he was oblivious that the stock market had been closed at the time. Interestingly, the stock market had recovered by over 20% during that 9.5-month period. Yet people in the fall of 1930 didn't view it as the onset of the Great Depression. They considered it more of a recession, something similar to what had occurred several times before, albeit not always coinciding with significant stock market fluctuations. Throughout history, the United States has experienced multiple recessions, so this situation didn't initially seem dramatically different from those previous instances. Around 10 days after his birth, the stock market registered a modest 1 or 2% increase. However, from then on, it embarked on a downward spiral, with the Dow Jones Industrial Average plunging from 240 to just 41. But before we continue, I would like to remind you that to get more information from us on this channel, you probably want to subscribe. And if you found this video helpful, give it a thumbs up and share it with your friends. Alright, let's continue. This decline was noticeable because if someone had handed you $1,000 on the day he was born and you invested it in stocks, specifically the Dow average, your initial investment would have shrunk to a mere $170 in less than 2 years. I'm sure none of us had ever witnessed such a steep decline in such a short period. Some individuals might have experienced such losses with a single stock. Still, in terms of a widespread impact on the American market, an 83% drop in 2 years, reaching a peak decline of 89% on September 3, 1929, was unprecedented. It was an extraordinary time, and within that brief period of less than a year, since almost everyone faced a significant challenge, people went to the bank where they worked and held their accounts, only to discover that the bank had closed its doors.
Thousands of people begin to gather outside the stock market. 10,000 people. They fill the streets from Broadway to the East River.
People wanted to know what was going on. They went there. These huge crowds gathered around the stock exchange, around the statues and on the stairs, waiting to get any kind of news they could as people came out of the exchange.
Suddenly, businesses started folding up, and the unemployment rate started increasing as companies could not retain their workers. At that point, he already had 2 children to support. Warren's father was reassured by his grandfather, saying, "Don't worry about your groceries. I'll let your bill run." While Warren's grandfather cared about his family, he wasn't one to go overboard. According to Warren, looking back on that period, one thing that stands out to him is the significance of the FDIC, Federal Deposit Insurance Corporation. Although economists may not emphasize it as much, if we had the FDIC in place, our experience during the Great Depression would have been vastly different. The FDIC was established on January 1st, 1934, as part of the comprehensive legislation implemented under President Roosevelt. It would have had a profound impact if it had been in effect earlier. During the Great Depression, people attributed the causes to various factors, such as the Smoot-Hawley Tariff Act and the margin requirements in 1929. These factors certainly played a role in triggering the recession. However, what often goes unnoticed is the sheer number of bank failures. Over 4,000 banks collapsed, representing 4,000 local experiences where individuals diligently saved their hard-earned money only to find it vanished when they needed it most. This affected people in all 48 states, impacting their neighbors and relatives. Such experiences undoubtedly had a profound effect on the collective psyche. That's why, in my opinion, one of the truly positive outcomes of the Depression was the establishment of the FDIC. It would have transformed the world we knew back then, as the devastating wave of bank closures across the country would have been mitigated. People who believed they were savers would not have faced the heartbreaking realization of having nothing when they reached the bank only to see a sign that read "closed." The Great Depression lingered on and endured for an extended period. However, its effects lasted far longer in the minds of people. The impact on people's lives and their perception of the Depression far outweighed its duration. Similarly, World War II brought about an involuntary adoption of Keynesianism, as we began running massive fiscal deficits that propelled our debt to unprecedented levels as a percentage of GDP. Despite this, we experienced a remarkable economic recovery. However, the scars on people's minds from the Great Depression remained profound. The stories passed down from Aaron's generation turned 1929 into a symbolic reference, akin to mentioning 1776 or 1492. It held such weight that it even significantly influenced stock prices. Reflecting on the years between 1929 and 1951, it's crucial to consider that the country was only 140 years old at the beginning. Within this time, 20 years were characterized by a lack of economic growth and a pervasive sense of disillusionment among the population regarding the American economy's worth and the prosperity corporations enjoy. It took the entirety of those 2 decades to restore the stock market to a price level that equaled its value at the time of the child's birth, 20 years prior. As we navigate through these challenging months, enduring the uncertainty of the future, it's worth reflecting on the resilience and perseverance displayed by those who lived through the 1930s. They faced similar uncertainties and persevered, ultimately witnessing the continued prosperity of the American miracle. It's fascinating to note that at the beginning of 1954, the Dow Jones Industrial Average, or Dow, stood at around 280. Warren Buffett has a personal recollection of that year because it turned out to be his most successful year in the stock market. The Dow surged from 280 to just over 400 by the end of the year. Once the Dow crossed the infamous figure of 381, which held significance due to its association with the 1929 crash, people began to wonder if history would repeat itself. While it may seem far-fetched considering the differences between 1954 and the country in 1929, the question lingered in the minds of many. The worry reached such levels that Senator Fulbright, who later became renowned for his work on the Foreign Relations Committee, chaired the Senate Banking Committee and initiated a special investigation. In March 1955, with the Dow at 405, The committee resembled 20 of the brightest minds in the United States to testify about the potential risks and whether they were on the brink of repeating past mistakes. It's incredible to think that even with the Dow at 400, there was such apprehension and doubt about the stability of our economy. The nation didn't fully trust in the strength of America. Warren Buffett was acquainted with these events as he worked in New York for one of the 20 individuals called upon to testify. He vividly recalls when British-born American economist and investor Professor Ben Graham, popularly known as the father of value investing, testified before the Senate Banking Committee. The Dow Jones Industrial Average stood at 404 at the time. His written testimony included a line that left a lasting impression. "The stock market is high. Looks high, it is high, but it's not as high as it looks." Since then, we have experienced the full force of the American tailwind. Today, as the Dow stands around 24,000, it's remarkable that the market has experienced $100 for every dollar invested. All one had to do was believe in America and invest in a cross-section of the country without needing to pore over the Wall Street Journal or constantly check stock prices. There was no need to pay exorbitant fees to anyone. The key was simply faith in the American miracle's enduring power. However, we must acknowledge the testing period between 1929 and 1954, as exemplified by the Dow reaching 380. During this time, people had lost some degree of faith. They struggled to envision the full potential of what America could achieve. Yet we discovered that nothing could halt America's progress when it came down to it. This truth was held throughout history, even amidst the scariest scenarios, such as the Civil War or the depths of the Great Depression. America has always prevailed, and I firmly believe this remains true today, just as it was in 1789. Even during our current challenges, the answer has never been against America. So we've come to the end of this video. If you've discovered this video or any of our other videos to be valuable or insightful, subscribe to our channel and explore our other helpful content. Don't forget to tap that like button and hit that notification bell, ensuring you never miss out on any of our latest content. And we genuinely value your feedback. Share your thoughts and experiences in the comment section below. We appreciate your presence in joining us on this extraordinary journey, and we look forward to seeing you on one of our other investor videos.